Hey guys, Aaron here with Carnivore Trades. I want to talk about three charts here that spell serious trouble for the market. And they're three charts that everybody should be paying attention to at all times. I use them every day. They're on my screens at all times. They are major leading indicators, and I'm going to show you why right now they're spelling major problems for the stock market. And the first one is the Dow Transports. A lot of you probably could have guessed this here, but the reason the Dow Transports are so important, so if you're familiar with Dow theory, the transports should lead the Dow Jones Industrials. It should lead the S&P. The transports are a very strong leading economic indicator of economic strength, right? Trucking names, trains, airplanes, things of that nature. If they're doing well, delivery names, UPS, FedEx, if they're doing well, it's generally a good sign of economic strength. Otherwise, it's generally a sign of weakness. In fact, going back to 2020, if you look at the crash, the transports we're making lower highs here, right? So in January to February, we made lower highs, and the spiders were making higher highs. That was a negative divergence there. Likewise, going back to the October lows of this past year, you can see the transports actually bottomed in September, and the spiders did not bottom until October. So generally a leading indicator there, it's very important. Right now on the transports, what we have here is, first of all, you have a huge blow off top, lower high, and now another lower high. And if you take a look at the spiders here, we had this big top, then we made a higher low, and then we took out this high and we made a higher high. I've been telling people on my channel pretty much every single day that transports are signaling weakness, and it is a problem. And now you can see really over the last week, and specifically the last 2 days, we've had pretty good declines, and now we're back below this big wedge here on the S&P. Additionally, what do we trigger today? What do you have here? A big left shoulder, a head, and now a right shoulder, now triggered on the Dow Transports. And target-wise, I mean, that should really take you back down to the lows, possibly even lower. Should that pattern play out, again, it's only 2 days. If we can negate that trend line, it's certainly possible. We can't rule that out right now, but that is a big head and shoulder pattern. The important thing I'm trying to get across here is that we have those lower highs versus a divergent. Look at the Dow, for instance, was starting to make higher highs when we took out that pivot from March 6th. So that was a leading indicator. And now we have a head and shoulders, which possibly tells us there's more downside in the future. The second chart here, and I'm sure people who follow the channel know, it's going to be the semiconductors here, the SMH. Again, why are the semis important? Well, they're in everything. I call them the new transports. In a way, right? There's semiconductors in, obviously we think of computer chips and stuff like that, but now you've got not just phones, but refrigerators, vacuum cleaners, pretty much everything has a chip. Cars has chip, and everything's run off a motherboard in a car. So they're in a way a very good leading economic indicator. And lately, like I've been saying on the channel, I didn't see a lot of upside in the semis. Back to, I said 260 would maybe be a slight higher high, and that's it. Again, going into a ton of resistance up here with this area. But regardless, we made a high here on the 31st. And then if we look at the triple Qs to relate that back to tech, we made a high around the same time. And the triple Qs actually made, a slight, double top there. But they held up, reasonably well, had a kind of a little bit of a rounded bottom there for a minute. But the semis did not, right? The semis were just drifting lower. And I said, this is a leading indicator, guys. This is a sign of weakness. It's a big red flag moving forward. And you can see here, what do we have? Big, fat rising wedge. And it's also visible there on the weekly time frame as well. And we broke that yesterday. And we've now had a secondary, well, actually, we broke it Monday. And now we confirmed yesterday. And then we got a little bounce at the support level here at 240. But if this 240 level breaks, this is going to 230, and then probably really down to this pivot around 220. So that's a big problem here. And semiconductors talk to us a lot. I can't tell you how many times I've taken day trades on the spiders or the Qs based off the semis. The market gaps down, but the semis go green. A lot of the time I'll look to scout long and vice versa. I can't tell you how many times I do it. I've done that. I use the semis every day. Everybody should be paying attention to them at all times. Last chart I'm going to show you here is the Russell 2000 via the IWM. Again, much like the Dow Transports, you want the Russell 2000, specifically like in a bull market, you want the Russell 2000 and the NASDAQ to be leading to the upside. And in a bear market, you want them to be leading to the downside. Russell 2000 is a small cap index. It represents risk, right? Smaller company, the higher the risk. So the more risk you're taking on in purchasing that said asset, And if that's the case, then in a bull market, you want obviously risk on. So you want the Russell to be outperforming. Right now, it looks a lot more like the transports, right? We had that blow off move in February, slight lower high in March, and then really just a nothing burger here. It has not been able to get anything going. Take a look on the daily here. That's a bear wedge, and that broke down the last 2 days. But more importantly, again, those lower highs, even outside of this rising wedge here, versus the spiders, which was making a higher high since that March 6th pivot. So the Russell was telling us major problems were down the pipe, and now this is broken down with a bear wedge. Additionally, if we look on a weekly, you can see here there's just a big fat bear wedge there on the weekly, and it's even visible there on the monthly as well. That breaks down. This is headed down to that 140 area. So again, use these charts. They tell you a lot, and you guys know that I've been talking about the risk window. I said that last Wednesday. I said Thursday would open up the window of risk for the markets, and we've seen pretty good. We had a good gap down on Thursday. We held up Friday, Monday, and then we've had a really good dump the last 2 days. But those three charts there were main reasons why I was calling that. Not outside of cyclical patterns and cycles and so on, but those were the reasons why I really had conviction in that call there. And you can see markets definitely under pressure here. If you see those three start to turn around and look bullish versus the spiders, then you might want to look for a dip buy here. But right now, they are signaling weakness. Again, IWM, bear wedge, breakdown. SMH, big rising wedge breakdown, and Dow Transports now today with a head and shoulders trigger here with lower highs. So lots of weakness in these sectors. Definitely do not discard this. Definitely pay attention to them. These are three charts that every trader should have on their system at all times. Anyways, guys, for more analysis like this, subscribe to the channel. Come find me on carnivoretrades.com for swing trade alerts and analysis. You guys take care.